morning, everybody. Welcome to Zoom at 8. I'm your host tonight, Julie Ann Peterson, and I am a senior director at Old Capital Lending. We are a premier provider of debt, mostly in multifamily, although we will go into other asset classes, your mobile home, your retail, any of the other asset classes that, are out there. Will do, but I'm telling you, multifamily is where it is at. The tax benefits, the ability to buy these, you don't have to be an oil and gas mogul. It can be simply you and I pooling our money in a syndication to get into some of these deals. So I'm excited to be here. Zoom at 8 is every Tuesday night. And thank you all of you who have been with me for nearly 3 years. We've closed almost 11 deals. We're almost going to be closing one next week, hopefully, or by the end of this week. So I put this together because a lot of education programs have an ecosystem. They will educate you, and you'll find your sponsors, and you'll find your investors, your attorneys, and all of that. But when I came to an education program that does a lot of educating on how to underwrite, they didn't have the ecosystem. So I said, that is an opportunity. So I created Zoom at 8. And that's what you'll find here. You will find sponsors, you'll find investors, you'll find attorneys, you'll find cost segregation, insurance brokers. A lot of people come here to find their partnerships that are deep relationships that can take, sometimes 2-3 years, and you can get them done here fairly quickly. Okay, so that's what I want you I want you to meet tonight. We're going to meet up with Patrick Grimes from Invest on Main Street, who, maybe he started out just like you, and it'll resonate. And so maybe he'll inspire you to take his course or to take some way to follow your dreams within multifamily. Patrick Grimes is here, and as you might have seen in my Facebook and LinkedIn, he is a dear friend of mine, and my life is much better with Patrick Grimes in it. So I thought, I have been trying to get Patrick here for years. I've wanted him to speak, and he's kind of like, well, I'm not there yet. I'm not there yet. And he's there. He's been there. And I keep saying, you could offer so much to our community. And now he's like, you know what? I think I am there. So I'm just so thrilled that Patrick is joining us tonight. Patrick is the founder and CEO of Invest on Main Street. He has over 14 years of experience in active real estate investing, purchased distressed assets. He's renovated and stabilized for long-term cash flow. His $146 million portfolio includes 1,957 units in multifamily apartment communities in the emerging markets across Texas and the southeastern United States. He currently co-sponsors syndication with strengths in underwriting, conducting due diligence, authorizing and authoring pitch decks, and raising equity with $20 million invested in his network of passive investors. He can also assist as a key principal, a loan guarantor with Fannie and Freddie experience. That is key. Patrick co-authored an Amazon #1 best-selling book called Persistence, Pivots, and Game Changers. As an inductee into the Forbes Real Estate Council, Patrick authors Forbes thought leadership articles and contributes to Forbes expert panels on investing in commercial real estate. A leader in the high-tech space, he contracts to design and build one-of-a-kind manufacturing automation and robotic systems through his other company, Protomation. Is that right? Protomation
Protomation Systems. Yeah.
Systems. Yeah.
The tongue twister.
Yeah, it is. And then he also holds a BS in mechanical engineering and a master's in science and engineering and an MBA. So I'm telling you, Patrick is overqualified to be with us tonight, but he is just an amazing person. And I think you guys are going to just have so much, you're going to gain so much from this conversation with Patrick. So if you'd be so kind, go to the right side of your screen, take the view, if there's 9 little dots, and make it speaker. And then we get to see Patrick live and in person. Patrick, how are you?
I'm great. I'm going to keep it so I can see everybody's face here. I'm particularly going to be watching out for Dave, making some strange, you and Dave making some strange faces at me, as well as Jim Biggs over there. But and Trevor, of course, been trolling me on social media about this. I'm really excited to be on here with you, Julie, because obviously we've been, since the very beginning of the journey, we've both been fighting the good fight, and it's good to see us both on the other side of it. Lots of others dropped off along the way, but you know, some of us are killing it, and I'm really glad to be. Yeah, and I was very resistant. What she's saying is correct. I just to get on and to get myself out there, but that's part of the whole story.
Yeah, so Patrick and I met each other a couple years ago. We did a little thing with Michael Blanc. We call them ourselves the Shifters. And we met for about 8 months, 9 months. And we talked about, okay, how are we going to do this? How do we do this? How do we help each other? And Patrick was several steps ahead of the other people in our group. Okay. And we learned so much from Patrick, but I'm sure, you know, Patrick being a couple steps ahead, he had gone through some difficult times to get there. So Patrick, I would love to hear, how did you get started? I know it was back a ways. So if you could kind of take us from how did you get into real estate back in the early 2000s, what brought you to today?
Sure. Is my audio okay? Everybody can hear me all right? Okay.
You're good.
Also, I'm not a professional didactic type speaker, so if people have questions, just feel free to jump in. My intention is not to do a PowerPoint presentation and force mute everybody. I'm here to help out and contribute whatever way I can, and that can take whatever path that it needs to take based on what the group here would like to hear. But the reality is I'm just another real estate investor that's been figuring out as I go, right? I think when I started in my engineering career as a mechanical engineering master's, I started machine design, automation, and robotics. And the owner of the company I was working for immediately said, "Hey, snot-nosed engineer, sure, you think you're smart, but all my money's in real estate. You should do the same." And that kind of resulted in, you know, while engineering is cognitively rewarding and the projects we do are fun, you need to put your money elsewhere, and it's going to, as soon as you can and as much as you can, and that's going to afford you the future that you really need and want. So back then, 2006, 2007, I dumped everything I had into these pre-development projects that, of course, the market was never going to go down. And during that time, and I was just looking at track records and near history of developers and markets riding what apparently was a bubble. And I did what was very normal, and that's personally guaranteed short-term bridge debt, highly leveraged, cross-collateralized, which means, you know, you're basically in a recourse state where they can come after you and everything you own. And I learned the hard way. I was able to avoid BK, but a number of years I paid on these money pits, and I finally was able to use an attorney to negotiate my way out of that. So that was my first take at real estate. And, you know, it definitely shifted and shaped the way I look at real estate now. I kind of dove back into my high-tech career at that point, focused a lot on my, you know, advancing my technology capability, So I did a bunch of projects with like Lockheed and Tesla, various larger organizations like that. And from there, I got back into single family. And then with single family, it was okay, I'm starting to make some bonuses now, and I need to start putting it somewhere. And I still had that voice in my head that I needed to get into real estate very soon. So I looked at resilient markets, places with diversified employment makeups. I looked at data to suggest where areas have shown true resilience over time. And then I looked at investment strategies, ones where they weren't so speculative, they were cash flowing on day one, or they were comparables around where you could see a quick turn, which is not a bridge sort of development multi-year thing, but a quick turn to get up to the comparables. So it's a very calculated type engineering approach to it all. I didn't know what the BRRRR method was at the time, but I was doing it and it was working. And then so I did that over and over, but it was basically moonlighting, right? Just
So
like
let's drop, sorry,
go ahead.
BRRRR method for those people who have never done BRRRR method in single family. What is that?
Well, I don't even know all the R's, but it's so buy, renovate, refi, and for me it was hold.
Yeah.
Right. And repeat maybe.
Maybe.
Repeat.
Yeah, I don't know. There's, like I said, I didn't know what it is. I probably still don't. I wouldn't know what it is, but for me, it was just a logical. I was a hold investor, but I was wanting to get my capital to work as much as I could. So I was finding good deals that I could buy under market. I could renovate very quickly, pull out my capital as much as I can, put it back to work, and then push it through. So that was essentially my strategy, and that continued to work. It was moonlighting though, right? Because that kind of came from me being just a hard worker, and I had this mindset at the time that I needed to sacrifice, my personal time outside of work for my investment portfolio. When I met my wife, all that shifted. She was there for my very last single family closing. I said, I'm taking a break, proceeded to marry her in California in Beijing. And then after that, I shifted to multifamily. Took about 2.5 years from when I said, hey, I'm going to do it. And Julie and John and a couple others and David were all involved when I said I was going to do it. And a lot of other people out there were not even sure what it was. I didn't know anybody that was doing it, right? It just kind of found my way there through looking for very low risk assets, low risk investment strategies. And my wife was challenging to bring on board because she's actually Chinese and they don't have financial freedom or using leverage or anything like that where you work until you die there. So all of that was a long journey, but it worked out for us and we've done pretty well with it.
So pretty well, I think, is an understatement. I think you've done extremely well, and it's happened over a very quick amount of time. I want to talk about, you went into multifamily underwriting deals. When we talked, you were trying to figure out, okay, what are the assumptions? How do I, put this into underwriting? Tell us that process and how you would go to other investors, kind of present it to them. Tell us that a little bit about how that is, because in this industry, you need partners, right? And you were kind of doing it alone, looking for partners, right? So kind of tell us about that. How did that work out for you?
Yeah, so, well, trying to, hearing about it originally, like, hey, this is a great thing, it makes sense, but going and actually and doing it's two very different things because you got to kind of find your way in the dark if you don't have somebody holding up a lamp. And so I kind of went back into my nerd mode that I've stuck pretty true with throughout my engineering career. I just went and studied a bunch of stuff, read a bunch of books, got a bunch of courses, went to a bunch of seminars. And over the course of all that, I met a bunch of people and began really digging in deep on the processes It was, I think, originally some podcasts by Michael Blank, which really started speaking truly to my heart. I run every morning and I run to podcasts. And that was the one that was like, what are you doing single family? So that's kind of what got the wheels turning. So his ultimate guide was part of it. And then a couple other courses that I did, like I did Dave Lindahl's and a couple other guys, I can't remember their names right now, that I went through. And then that led me to kind of the ecosystem within Michael Blank at first. And that's when I got on the Slack channel. I started downloading SDAs, filling things out, uploading them, getting feedback. Syndicated Deal Analyzer is what that SDA is. And I got a lot of, it was pretty cool. On that channel, I actually got somebody that started like a Tuesday where every week they'd send out, oh, not this one yet, but every week they'd send out, here's a property, let's analyze it, let's talk about it, right? And then so everybody would kind of go into their hole and analyze it and come back. And then at that point, I had to start getting deal flow, right? So, and this kind of comes back to Julie's point. By this time, I had my wife on board to some extent. So I was traveling to different markets, different states, meeting brokers. It was not easy. And I kept seeing, deals go to other more sophisticated people like Tucson and Arizona. I'd get in with a broker, I'd go to lunch with them, and he would give an offer to Bakerson, right? The people that have been doing deals there for a long time. So there's a lot of deals all over kind of my strategic markets, a lot of the same kind of criteria for single family. And eventually just coming with deal after deal after deal, I finally, and by that point, I was in a mastermind with Julie that was meeting was it every Monday morning?
Every Monday morning.
And I was in Hawaii and the sun hadn't even come up, right? Or I moved to Hawaii during that mastermind, I think. Moved to Oahu, and I would show up there and it was still dark and on that. And it was pretty brutal. It was pretty grueling. A lot of red eye flights, a lot of not wasted time, but a lot of going through the trenches and stuff like that. So
but you were underwriting deals, you were trying to figure out, okay, how do I do this, and you were kind of bringing these deals to other general partners saying, hey, what do you think about this deal? I underwrote it. Is there anything? Can you give me some feedback? What do you think? And you went to some high level guys and they kept saying, no, looks good. Maybe not. Let's try it again. Come back. And you stayed at it. You were persistent, right? And then one day, one of them said, hey, why don't you help me out, be on my team, right? Tell us a little bit how that worked, because this is the key point of how you pivoted your business and your focus.
Yeah, and I think there's probably 3 or 4 sponsors that I was constantly targeting. And if you remember, there was one specifically I was this close to getting in, and then the last minute it fell apart. And it's a lot of factors that kind of got to line up to all of a sudden show up on the team. But yeah, the one team specifically, I had brought dozens and dozens of deals to, ones that I had thought, hey, you know what, I really like this one, or ones where I'm like, hey, this is what I'm concerned about. And they came back with yes, and here's a lot of other things that you should also be concerned about, and here's things that you shouldn't be concerned that you are. And eventually through that, we developed a relationship. And I brought a deal to him, and he said, hey, let's talk next week. I got something coming up. And we had that call. It was a Zoom call, and he's like, hey, I've got all this stuff going on, but I have this other deal. It's a smaller one. It's 86 units in North Augusta. Do you want to jump on there? I gotta, I could really use the help. And I was like, no. So
I want to be
sure.
a GP. I want to do my own stuff, right?
Yeah. Well, yeah, right. Well, at the time, I didn't even know if I was going to get and how much GP I was going to get. And in fact,
Sure.
I didn't know how much GP I was going to get into that deal until long after it was closed. And I think that was the same case on the second deal.
This is key, guys. This is key. Patrick got into a deal, got into a relationship with a investor who said, come on to my deal. And he worked even though he didn't know what he was going to be, how he was going to be taken care of, right? So keep going, Patrick. This is great. And I want to bring this to everybody's attention because it might not be that you are the one that finds the deal. It may not be that you're the underwriter. It may be that you simply have so many friends that have lots and lots of money that you can create a position in a syndication. And that is what you have to find. Where are your strengths? What do you bring to a deal? Now, Patrick brought underwriting. He brought due diligence. He brought all of these great things. He was primed to have somebody pick him up, and that's what he found after he kept the conversation going with these general partners. It doesn't happen overnight. Okay. How long did you work on this with these guys?
Well, in total, it was like 2.5 years of chasing deals all over the country. I think went from the time that I said, hey, I want to do this, to the time that I got in my first deal. And to be fair, COVID put, probably an extra 9 months on that or so. And then good half year of that was just learning what I should be doing, right? Just what is this thing and what does it look like? And narrowing in on the asset class itself. I mean, I even looked at some mixed use and some commercial stuff. And, it wasn't until later that I started realizing the higher risk profiles of those investments. I think that, I was talking to Garrett Lynch about it, and he said, he made a good parallel because he told me that it's in the trenches, right, of just grinding it through and learning everything you can that you actually make your success. And that was true because it came on the scene and all of a sudden I could do various things. I had no idea that I could do these things, right? Or that they were valuable. And I didn't know what the sponsor actually wanted. He didn't need capital. He didn't need a capital raiser. He still doesn't, but he needs somebody he can rely on that can do all kinds of stuff. And by the time the third deal came around, he was like, hey, we got another deal, but I don't want to tell anybody about it because we're still closing on the second deal, which we closed on like New Year's Eve, 5 hours that year. But then we did due diligence on like December 15th. So we had to go under cover of darkness, like red-eyed out literally to Dallas. And we had a skeleton crew. We did the due diligence, but we had, somebody that you wouldn't know that was happening or that it fell apart or that it went through if you weren't in there and just working your ass off with the team. So it was a really good fit. At that point, that sponsor took like an 8-month break though. So then I was out pounding the pavement again, looking for more partners. And, we've hit some pretty awesome deals since then. And then I've done a couple back with them when they started up again.
Okay. I want to know about, there's one that you were in, you were finding capital for it. You had underwritten it, done the due diligence, ready to close. And then what happened?
Oh, this is the one that burst into flames?
Flames.
Okay.
In a fire.
It burst into flames.
Burst into flames.
Yeah. So I don't know. I didn't lose a huge amount. I know that the earnest money is still gone. But I didn't put up a huge amount of the earnest money. It was like $750,000 on that one. But that the owner of that property did take that earnest money, and we still haven't got it back. But on that deal, I had flown to Dallas, done due diligence on, it was a 280 units or something, and we had spent a lot of time. I had 400 some people lined up for that webinar, and tens and tens of thousands of dollars, weeks and weeks into this thing. And 21 units burst into flames the weekend before, or right before the webinar. So it was a technical default, right? Or that we were essentially at a breach in the contract. We thought it was going to be a win, while if you're properly insured with replacement costs and loss of rents, which I'm very risk averse, so all my deals are like that. Then oftentimes, if you have enough scale where the deductible doesn't hit your deal significantly, those can often be a win, devastating for the tenants, but a win for the investors, right? So we actually, when quotes came back for what the contractor could charge us for the maximum of what the insurance would cover, it actually was a positive, because we get a whole new set of buildings. They pay for 100% occupancy. We weren't at 100% occupancy, and they were older buildings. So we pay a delta on the improvements, right? So at the end of the day, and we can actually do it for probably less, we believed. So it was huge savings on the CapEx. We end up with a better building. We're riding out a significant percentage of the property, and occupancy, we're like, okay, let's move forward. The owner took off, and and so yeah, that one. But you'll never know about that, other than, hey, we pivoted to another deal after, right? There's a lot of pain and anguish getting through these, right? But every time one goes right, it's a lot of time off your working career and a better life for your family, right? And your future on the other side. So you got to be willing to just go for it, and then just fight your way past it. But I mean, on the other side, the deal I closed on right before that with the same partnership in Jacksonville, Florida, we bought in March, sold in December, same year, bought for 27 million, sold for 37 million, 1.7 equity multiple in nine months. So I mean, it was huge win, right? So I mean, at the end of the day, you're walking away from the table in a solid position.
Okay, so it's real important that this new phase of people that are coming into this community, they're like, I'm going to be a co-sponsor. Okay, and I've talked about this before, everybody. Co-sponsors are people that bring in capital, right? But bringing in capital doesn't mean, oh, I brought it in and then I'm gone. You have to do a job, okay? And this idea of, well, I'm just a capital raiser, that is not what we're talking about here. We are talking about somebody, especially Patrick here tonight. Patrick does a lot of the due diligence. He is a partner in this deal. He's brought in what, $21 million? You've capital raised $21 million, right?
Somewhere north of 20. I actually don't know.
Right?
The exact
I mean,
number.
this is 2 years. Has it been 2 years that you've been doing this? What a success story. But it's not because he walks away. He has his own money in it. He does the due diligence. He underwrites all of the deals. He puts together the deck. He puts together the webinars. These are his clients that are that he's bringing to the deal. He's watching for them. Okay, he doesn't just bring them in and they walk away. These people are with Patrick. They're with Invest on Main Street. And I'll tell you, Patrick does an amazing job marketing. If you've ever gotten, you've got to get in with Patrick's marketing, because you'll get to understand how he is so successful. He puts his name on all of his marketing. Okay, it doesn't have the sponsors, all of their information. He puts his name because he is part of this deal. Okay, a lot of people are not following this method. This is where you're going to be successful. Okay, is the way that Patrick does these things. So Patrick, can you walk us through, when you get a deal, can you tell us, how does that work? How do you take it from, okay, we've won the deal? What does your job look like from there after you've underwritten it and your whole team has said, yes, we're going to go for this? How do you,
for clarity, I do co-brand. I do co-brand on the decks. I believe it's a part of integrity and transparency, not to pretend like it's all
just
me,
yours. Yeah.
right. And I feel, and limited partners they have the right to do due diligence on me. They also have the right to do diligence on my partners.
Correct.
And I get background checks all the time, and because I'm signing on the loans sometimes, but but I commend investors when they want to ask questions, they want to probe who are the partners, who are the actual people doing the heavy lifting, what are their roles, and I think that's important. So on my web pages and on the decks and everything, it all shows up. But to Julie's point, so in recent history here, I have not been out pounding the pavement with brokers, except for after the deal looks like it's a good deal. If it's under LOI, I think I've called David before and I said, hey, I really need some help. We got to do due diligence on an asset, but we can't tell anybody about it because it's in Houston. And we need to do due diligence before we get to the purchase and sale. And he's flown out with me and helped me out with that. So oftentimes what that means is, specifically in that deal, which was a great deal, the owner had dropped 19% bad debt, meaning he didn't collect 90% of the rents. And he had basically neglected the tenants. In fact, we discovered that there was almost a ream-sized stack of unanswered maintenance requests. And when you're not giving a cleaner, safer, improved living experience for your tenants, you're gonna lose your building, especially during a pandemic, right? So when we went out there, it gave us a great opportunity to add value, but we were a little uncertain about what the situation was. We had heard some information from brokers and lenders and some other people that this guy really didn't know what he was doing, trying to self-manage 320 units. So we went out there, what did we discover, David? There was like 2 buildings that needed foundation issues. There was about 15 undisclosed down units, something like that.
Yeah, there was all kinds of crazy stuff, and all the tenants were just complaining about how management wanted repair stuff. They had leaks in their units, and management wasn't repairing anything. I was just shocked at the neglect and the lack. You think if it's your property, you want to take care of it so you don't keep having problems, and they were just letting stuff go. I mean, the down units were crazy. They were just been down forever. It's like, don't you want to fix those up? And Patrick, you guys are probably fixing them up by now and are collecting rent on it, and that's like a big chunk of rent that you're getting.
Yeah, and so I mean, there was that one crackhead too that had like the black mold, and we were, how are you living here?
Yeah.
And people just never walked those units before. I don't even know if the prior buyer, because he obviously didn't touch it, if he even ever walked those units, if he ever got into those units. But on the other side of it, this guy was in a really tough spot. It was off market. He had to exit. He had to exit right away. He had gone into it, into forbearance, stopped paying. So the clock was ticking, right, for him, which is great for us. And it's good for the tenants, because now somebody can come in and improve that cleaner, safer, improved living experience for them, as well as giving a reasonable, safe, risk-adjusted return to our investors. And so we're on the way. I mean, the first thing we did was print out the ream of paper of maintenance requests and chunk through them, and we're getting after it. But yeah, so you get in there, you do all you get your elbows dirty, right? Maybe not use your favorite pair of shoes, and there's drainage issues. You're literally walking through the mud. It's sometimes, and it's raining, and it's, I was living in Hawaii. It was cold. So anyways, but we're you get through it, and we have the apps, right? There's a couple different apps. We just take pictures of every single unit. We take notes. We come back. We do our download. We adjust our CapEx budgets, adjust our underwriting, and then we've got now 2 units that need foundation issue, 2 buildings that need foundation issues. We just add all that in there, and then we adjust the returns and kind of add in a bit of risk component to it, and then see where the returns lie. And
so going from, let's just kind of back this up just to kind of where you were. So at first you thought, I can do this all myself, right? I can find the deal, I can do everything, underwrite it, find your partners, find capital. You've now shifted to being more of a, you're now really part of the team. You're not finding the deals, as you mentioned, but you're doing all the due diligence, the capital raising, all of the monitoring. it's really a different way than what most people, how they get into it. And you've been super successful. Now, do
I'll
you
take
work?
exception and not part of the team because I feel a real need,
Yeah.
and it takes various jobs, right? And different kinds of personalities to do these. The person that is ultimately underwriting, right? When you get to the institutional side, that's typically a $20, $30 an hour analyst that graduated college. Now you have to know all that to get into business, right? But there are those guys that are the family offices, private equity firms. They're not very old and they're not high paid and they're in their basement just chunking at numbers all day, every day, right? That's a very different personality than an entrepreneur, somebody who's running a private equity firm that's going to balance brokers with investors, with the really, really painful lenders, just joking, and all the other stakeholders, right? There's personalities there, there's skill sets there, and the reality is it takes a lot of different players to make this happen. So I completely disagree. What I'm looking for is to be part of the team, and what I'm looking for is to add real value. And a lot of the times I've been asked, like, how do you add value? I was like, well, you got to ask, right? You got to find out what they actually need, because a lot of the guys that are starting out, they're just pushing deals at sponsors and like, here's value, here's value. Well, it's not value unless it's fulfilling a need. So getting into the game, being part of the team is exactly what I want to do. And it's been working great. And it fits our personalities because it frees up others to go find other deals, right?
Yeah.
And the reality is the asset management side, I've been in machine design, automation, and robotics most of my life, right? I love that invention, one of a kind, first of its kind designs. That's what I do. That's what I've been doing. And I love that sort of that hunt for projects, meeting needs with development and R&D groups and cross-functional teams, and coming up with something that doesn't exist. And this might be the only one of its kind, and then getting it going. But I'm not the process engineer that's going to take it from, like, when I was working at the Toyota plant, there's guys spent their entire life on one plastic part of the car, one plastic part, the windshield molding of a Toyota Tacoma. One dude spent his whole life perfecting that piece. That's not me, right? An asset manager will take that every single week and get that from 90 to 95 to 98 to 99 to 90, but me, I'm off doing the next hunt, right? So that's really what you need to find, is kind of overlap kind of your internal skills, what you want to do, what you're passionate about and excited about doing, and find other people that have those comparable personalities and skills. Because if you're going to jump into an industry, you don't want to jump into a job. I already have a job, right? I have something where I'm like forced and molded to do this, I'm paid well at it, right? But if I'm going to go do something else, better be something I'm really excited about and passionate about, or else I'll just keep doing this other thing.
So how do you fit this into your life? There's a lot of people. Scott Henson is here. He owns a company. He works, 50, 60 hours. How do you fit that into your day?
Scott Hansen?
He's here.
Who's Scott Hansen? I'm trying to remember.
Scott owns a POS company. Here he is.
Are you asking me how I fit that into my day?
No,
Oh.
you probably want to know, how do I fit into your day like Patrick does, being a general partner, right?
Yes.
You want to get into this. So Patrick, what is your recommendation for Scott, who owns his own company, has his own, W-2, quote unquote W-2? How do you do it? How do you do it, Patrick?
Pain and suffrage. No, I'm kidding. No, but I understand the question now, at least. Well, like I said, when I was doing single family before, it was moonlighting.
Yeah.
And I was doing all the jobs, things I didn't like doing. Right. But then I was also getting a master's degree, and then another one, engineering and business. And that was tough. Right. And but I think what I leaned into in the multifamily space is you get to partner up, right? You get to find what you're passionate about, what you want to do. And then it doesn't seem as tough. Now, when I was learning it, I did tell my wife, hey, I'm going to do this. I want you to come along with me. I need you on the team. I need you to learn. And, you know, we went to events and seminars together, but that was weekends, right? And then when I got materials, I got to be like, hey, I'm going to spend a couple weeks here at Starbucks going through this. Do you want to come with me or stay at home? She actually went with me on a lot of those, and she's a math whiz. In addition to, she's a rock star in her own business too. But and I think bringing her on board was really important. And she went off, and I think she's got like 60 passive investor videos now on our website, 1 minute to cash flow. So when she got on board, she got really on board. And finding the right team to be on that has the right, where you're valued and you value them and you're getting excited about it, and then chasing it. But each time you do it, it is years off the end of your life, right? Not only for you, years off, sorry, the end of your working life, right? It's freedom. On the backside, it's a better life, stability, and earlier retirement, living the retirement of your dreams while growing your basis and leaving a legacy to your heirs, all the while doing something you're excited about. That's something you can really wrap your mind around if you keep focused on it. My wife created the vision board. I didn't do that. You know, I had Julie barking at me every Monday morning in our mastermind for a while. There's just all kinds of quotes you can throw out there, but sacrificing short-term pleasures for long-term gains. You know, if you ever find yourself traveling through hell, keep going.
So
right?
how about for you? You have this company that you own for automation. You have this company that you're doing, you know, co-sponsoring. What's the next steps for you? Are you going to continue to do, you know, what you love, which is your automation? How are you going to fit that in? You're trying to have a family, trying to, you know, own a home and do all that stuff. What is the next steps for you?
Well, first of all, you might underestimate what a geek I am inside, because I love the engineering stuff. It is fun, especially with the stuff that I'm doing now. Q2 in 2020, I didn't get a single order because COVID just decimated everything. But then pivoting hard into COVID assembly test kits, I had 2 record years, one after the next. And that's great financially, but it's really cool because I was actually flying from Hawaii, but I was landing all over these places where these hardworking people are not taking any time off. They're working double shifts and they're inventing and solving this problem of a pandemic. And I was taking a COVID test at every facility I went, and then I'd take a separate one in order to fly home to the Rock. But it was really neat to be involved in that and to be on the cutting edge of something. And so I wouldn't trade that at all. You know, at the same time, multifamily dried up for a while, right? So there wasn't a lot to do. I've always done investments, and I've always done engineering. So for me, it's always kind of been 2 parallel paths. So you think
you'll be continuing to do the parallel paths, or are you thinking about, you know, financial freedom is here for me? Are you ready to take that next plunge?
Well, so with the wins from last year, it has shifted to like, I don't have to do it, to like, I'm still enjoying it. Let me keep doing it.
Love it.
And so I get to live with that level of empowerment moving forward. And I'm going to keep after it because, you know, it's part of what, I mean, I've had conversations with them, the company I'm contracting with primarily, and they know about my real estate business, and we're still getting after it, and it's fine. So everything's moving along.
Fantastic. What about words of wisdom? Like, what would you tell somebody who is grinding it out, underwriting, this doesn't fit, I'm looking for partners, I don't like that partner? What are your words of wisdom going through this? What do you think would make somebody go, you know, I'm going to try that? What do you think?
It's hard to say without kind of repeating a lot of things I've already said, right? I do believe that a lot of people kind of, it's easy to make deals pencil if your criteria wanes a little bit. We saw a lot of that, especially prior to COVID. I saw a ton of deals that I even flew out for through people just getting really hyper excited about the bubble. And probably 3 or 4 that I flew out for, and I didn't even look at the underwriting before I got there. I just kind of trusted. And when I looked at it, I was like, these guys just simply don't get it. They haven't seen a downturn. They can't even answer, they can't even understand my questions about the what if scenarios, right? And they're just almost got blinders on. And so I would say just stick very true, get very clear on what your stress testing is, but get very clear on what your long-term goal is, and stick it out. Keep looking for the right partners. And when you turn down deals, when you turn down opportunities, they're going to respect you for that. And then you're going to attract the right kind of people, right? Because every time they see, hey, well, he said no here and here. Oh, that's a statement he's making, and I value that. So say no a lot more than you say yes is definitely, don't do a deal just to do a deal. I'd also say make sure that you have this know, like, trust with the sponsors. And I'll probably echo what Julie's saying is, I don't think that being a capital raiser is something you want to advertise. There's been numerous, if you are identifying that way, there's numerous syndicators that Julie and I know that have been audited for having just capital raisers on their team, which means all their investors get audited. So, technically speaking, you have to be a broker dealer, FINRA licensed broker dealer for that. Not technically, actually. So your primary job cannot be just capital raising. And my primary job is never capital raising. And it's very easy for people to put you in this pillar or put you in that pillar, put you in that pillar. But I think you truly need to be a co-sponsor. You truly need to be taking ownership over the deal because it is your deal. If you're on the GP and something goes wrong, you're on the bench. You're just as responsible as the syndicator. And there was a syndicator on my buddy Bronson's podcast just a couple weeks back that went to prison for 10 years because he was moving money around and not disclosing it. It was okay for him to do it, but he just didn't disclose it. So if you don't know what's going on, if you don't have access to the financials, if you haven't done the underwriting, you haven't done the due diligence, you're not only not doing yourself a service, but you're bringing on people with you to something that you can't control. And I think that is a big, big problem right now because there's a bunch of syndicators out there kind of farming out the capital in ways that are it's illegal, right?
Well, and to that point, and there used to be $5 million deals, and that was, a little bit easier. Then there were 7, then there were 10. Now it's 20 and $30 million. And these syndicators who've gotten into this quickly have not conditioned or improved their investor pool, and they're needing some help. But you don't want to get involved with the wrong deal, and you want to make sure that you understand all the partnerships. You have to understand all of the underwriting. It is super critical. And that's what I love about Patrick is he is in the trenches. He's not on the sidelines. He is he's part of the deal and the transaction. So Patrick, if somebody wanted to get a hold of you, wanted to do some investing with you, kind of talk a little bit more about your journey here, how would we get a hold of you?
Yeah, so we have investonmainstreet.com. It's investonmainstreet.com. I think I can drop it in the chat here.
Yep.
Did that go in? No, it didn't. I'll work on that real quick. Also, on my website, you're going to see some freebies on there. One of the freebies is a passive investor guide, and it kind of goes through my whole business case for, where I came from, my mindset, recession resilience, inflation hedge, tax shielded. What does value add mean? And how does that grow your wealth in a compounding way? And multifamily versus other investments. And so I think that it's a lot of pictures, a lot of charts. I am a big engineering nerd, so I do have some data tables, but I've summarized a lot of that. I think that's a really good tool, especially for aspiring people in the space. I also offer this, as she was saying, an Amazon #1 best-selling book I co-authored with a few other guys in it. The fact that it was an Amazon #1 bestseller has nothing to do with the fact that the Russell Gray, the real estate guys, is here, or the lead guitarist of Def Leppard is here, or some NBA, NFL players are here. But I'm here, the one with hair. But this is a really cool book because it is persistence, pivots, and game changers, turning challenges into opportunities. And this was a really fun project with some amazing people in the world. And if you would like a copy of it, on my website, if you sign up for a welcome, we'll give it to you as a free welcome gift. If you sign up for an investor strategy session, we can talk about your goals, figure out what you're doing, and get you in the right direction. And so we give this away for free, actually, because I actually believe in the content. I think it's a really inspiring story.
Fantastic.
Yeah.
And so that's a lot of free stuff. We really appreciate that. Make
or you
sure
can have
that
me at your meetup like David, and I gave him a book.
Hey, look at that. David got his own book. This is fantastic.
It's
And
not
maybe I'll get
signed.
you some merch. I don't know. I have to work on that. Hey, Patrick, we could seriously talk all day because we've only scratched the surface. You've done an amazing job using your different automation, your software. How did you get into your portals? And someday I want to have you back because I think you're such a great resource for a lot of our investors who, they don't know. They just don't know where to start. So I hope